Welcome back, and you're watching Market Fatafat on ET. Now, let's keep it going with all the stocks that are buzzing in trade and talk about Sapphire Foods. Now, this just came out with its numbers a short while ago. When you look at the revenues of the company, that are seeing a growth coming in as well. 560 crores is what the revenue is at versus 499 crores last year. Profit, a sharp jump is what we're seeing there mainly because the profits have come in at 135 crore versus just 26 crores last year. So 135 and 26 crores is what the profit was. So around a 5 times growth on a year-on-year basis, and that is why that spike that we saw coming in the stock as well post the numbers. Keeping an eye out on Sapphire Foods.
Let's move right on then and discuss the next mover in trade, and Dhwani Patel, who is also joining us on the charts from Finversify, shares with us her outlook on HUL. So Dhwani, what exactly are the charts indicating? Because we had an extensive discussion earlier today about the FMCG sector as a whole from a fundamental standpoint. But technically, is this one your favorite?
Yes, absolutely. What I'm seeing over here on the chart structure of HUL is that the stock has given a good trendline breakout in today's session, and we are seeing a good up move also following up along with volumes onto the same. So it definitely is on my buy list in the FMCG sector over here. A short-term target of 2700 is there, and after which 2740 is also not far for this one. One over here has to maintain a stop loss at 2590.
Okay, keep an eye out on those levels. On the buy list is HUL for Dhwani. Moving on, PESA Digital. This one is also in focus on the back of its numbers. A good growth in terms of the revenue on a year-on-year basis. Around 19% growth in the revenues, coming in at 118 crores. Operating performance of the company was also quite strong. Look at the EBITDA performance. That has also seen a good growth of around 29% on a year-on-year basis, while in terms of the margins of the company, 78.5 versus 72% last year, 600 basis point increase in terms of the margins of the company, expansion in terms of the margins of the company, and net profits up by almost 39% as well. Stock is not doing pretty much anything as of now, just a decline of 0.5% in trade, but keeping an eye out on PESA.
All right, there you have it. That's the view coming in on that stock. Let's move right on then and discuss a very smart mover in today's trading session, and that is Zensar Tech. Came out with pretty much a healthy set of numbers across the board on all parameters for Zensar Tech, as you have the overall earnings, the PAT growth, which has come in higher this time around at about 152 crore rupees versus 59 crores on a year-on-year basis. Meantime, even in terms of the other parameters, you've got the company which has reported a pretty strong set of numbers across the board, as you've also got the other numbers which have come in healthy. The standalone net sales as well have been strong for Zensar Tech. You've also seen the margins as well that have really managed to scale up this time around, and clearly the stock is holding out very smartly in today's trading session, reacting to that very strong set of numbers.
Okay, keeping an eye out on that, and those were on the numbers. But Dhwani, on the chart, Zensar Tech, is it a thumbs up coming in from you as well?
Yes, absolutely a good big thumbs up coming in from this one, and the reason why technically it looks good to me is that a weekly breakout is what we are seeing in this week's candle closure, and this is a very important point that on weekly basis people are taking positions into this particular stock one and taking it back home. So it definitely gets on my buy list over here. You need to enter it on current price. The target on the short term over here extends up to 400 levels, and you can over here put a stop loss with a trailing stop loss strategy. This one would work fine, but as of now the stop loss over here is coming up at the breakout level, which is 312.
All right, tracking Zensar Tech on the charts as well. Moving right on then, Vamakshi, what's keeping Exide in the spotlight?
Well, absolutely. Exide is in focus on the back of a brokerage note that has come in. Now, a few days ago, the company did report its numbers, but let's look at the report that has come in from JP Morgan. Well, they've maintained an overweight rating with a target price of 225 per share. And what they've highlighted is that the demand trends in the core lead asset business look quite healthy going into FY24. They believe that any meaningful stock price correction could present a very good entry point for this counter. The valuations also quite attractive, and that is the reason why JP Morgan has actually maintained an overweight rating on this counter with a target price of 225 per share. But apart from that, the management also highlighted that they're expecting replacement market to pick up and the exports could see a bit of recovery as well. They are focused on expanding margins, and in fact the lithium-ion project is progressing well with the necessary approvals in place. FY24 capex for core lead lead-acid batteries is expected to be around 500 to 600 crores. So largely a good set of numbers. Brokerages are appearing to be positive. Management commentary is quite optimistic as well, and that is the reason why the stock is up 1% in trade today.
Surely optimistic commentary. JP Morgan overweight on Exide. Moving on to the next one, and Ujjivan Small Finance Bank, Lisa. Why is this one on your list today?
Small finance, they reported their numbers at market close yesterday, but the stock is reacting like around 4% because of good set of numbers. The NII was up 36% on year-on-year basis. PPOP was up 56%, but what they reported is more than twofold increase in their PAT, and it stood at around 309 crore. In fact, it is the third consecutive quarter for getting this 300 crore PAT. And also the AUM growth that remained robust at around 10% on Q-on-Q basis, and the deposit accretion that also remains strong at around 10%. What improved is their core operating performance, which is reflected in their strong AUM growth, and also the sustained decline in their stressed portfolio that is expected to aid growth. So well, as we can see, the stock is up around 4% in today's session.
Okay, let's move right on then and discuss the next chart then, Dhwani. Manappuram Finance, what is exactly the chart indicating, and where do you believe that one can look to nibble into the counter?
So this particular counter has been in a very bearish trend, and what we are currently seeing also that it did give some bounce back from the lows, but then it's continuing its downward trajectory again. One can look up at short opportunities on this particular stock. We're also seeing derivative data also suggesting that the shorts are getting built up in this particular one. 115 is acting out as a resistance in this stock, and a downside level over here expected is of 102.
Move on and talk about Indian hotels then. This one is in focus because yesterday they met a group of analysts, and now what we are getting in from reports from Nuvama, which is suggesting that the company has highlighted an EBITDA margin target in the is constant at 33%. The management is factoring in some inflation, portfolio investment, and being quite conservative. Management fees targets stepped up from 400 crores to 550 crores. What they're saying is the Ginger target was the highlight target of rupees 600 crores. An ad on that. Now, in terms of the Ginger brand potential, also they have around a 50 to 60% margin, and April 23 revenue per room is at 11%, which is higher than April 2022 as well. Expected to see be higher due to the premiumization in the portfolio as well. They furthermore plan afoot to add another brand portfolio as well, and M&A cannot be at the expense of balance sheet health is what the highlight is coming in as well. Now, in terms of the industry scenario, currently the demand is growing at 7%, whereas the company supply is at around 5 to 5.5%. That's the word coming in from the management in its analyst meet, and we got these updates from Nuvama.
All right, there you have it. That's the word coming in on Indian hotels. In the meantime, let's focus in on the next newsmaker, and that is Religare Enterprises, which also came out with its quarterly performance. And you have the net profit, which has come in at about 3,517 crores rupees, and this is a complete turnaround from the loss that the company delivered on a year-on-year basis. So last year, the net loss for Religare Enterprises was about 588 crore rupees. So Religare Enterprises has clearly come out with a healthy set of numbers on that front. Meantime, you also have the net sales revenue growth, which has come in high by 46% on year, 1,396 crores versus 953 crores. And the company has appointed Malay Kumar Sinha as an additional director and as a non-executive and independent director on the board for 5 years. 168, that's where the stock is at.
Okay, let's move on then to Vedanta on the charts. Dhwani, how is this one looking like an interesting one to buy at this point?
This again is a short candidate from my side. What we are seeing over here in Vedanta is the stock is taking up a resistance is a 50-period exponential moving average on a daily chart. We are also seeing over here on the derivative data that we are having short built up coming up. This particular stock 280 is acting out as a strong resistance over here, where we are having cluster of evidences suggesting the same. So from current level, one can go short on this particular one in the futures counter. The short side target for this particular one will be 265 and a stop loss of 280.
All right, there you have it. That's the take coming in on the charts of Vedanta. Moving right on then, stock number 29. And Vamakshi, let's discuss Mangalore Chemicals in greater detail.
Well, yes, the stock is in focus on the back of its numbers. When we look at the stock's price movement, when it started trading, the stock hit a high of almost 105 per share, but definitely the stock has declined since. But nevertheless, let's look at the results. How were they? Well, revenue did see an uptick of almost 62% on a year-on-year basis and stands at 1,164 crores. EBITDA came in much higher. 24 crores is where it was in the same quarter last year and has now increased to almost 128 crores. Net profit has also gone up almost 22.6 times for the fourth quarter. In fact, it was at 3 crores in Q4 of last year, and it has in fact gone up to almost 68 crores this time around. Definitely, we're seeing an improvement as far as the margins are concerned. 3.4% is where it was last year. It has gone up to almost 11%. Apart from this, the board also recommended a dividend of 1.50 per equity share. Largely a strong set of numbers is the reason why Mangalore Chem is in focus. As of now, the stock is trading flat, up nearly 0.2%.
Keeping an eye out on that. Let's move on to another earnings candidate, BSC. Lisa, how are the numbers for this one?
Good set of numbers reported by BSC. The revenue was up 14% on year-on-year basis. Even the EBITDA, that was up at around 49%, and that was mainly due to lower expenses. The expense ratio to the sales, that stood at around 50% versus 63% last year, and that saw it flowing into the margin, and margin stood at around 49% versus 37% last year. Well, they also reported a 24% jump in the net profit. Talking about FY23, that was a challenging year for them because if we look at the average daily turnover in the equity cash segment, that was down 23% on year-on-year basis, and even in the derivative segment, the average daily turnover, that was down 48%. So the management said that they are taking significant steps to improve the product portfolio going forward. So well, as we can see, the stock is up around 2% on the back of good results.
Okay, let's move on and talk about Greaves Cotton that came out with its numbers a short while ago in terms of revenues. The revenues have come in at 827 crores, which is a growth of 33% on a year-on-year basis. Profits also is something that we're keeping an eye out on. 63% growth in terms of profits, but margins is what we're seeing a decline in. As of now, to talk more about the numbers, the road forward as well for the company, we're joined by Mr. Nagesh Basavanhali, who is the Executive Vice Chairman at Greaves Cotton. Thank you so much, Nagesh, for joining in with us this afternoon. And obviously, the first thing, Nagesh, we want to talk about is in terms of just the outlook in terms of your margins, because that seems to be a bit under pressure. So how should we be viewing the margins going forward for the company? What is the outlook in terms of the margins? Is it that 5.6% level is what we'll be sustaining going forward in FY24?
Yeah, good afternoon. Thank you for having me on the call. As you said, Greaves Cotton announced its highest ever quarterly consolidated revenue of 827 crores. And consolidated EBITDA for Q4 stood at 49 crores, right? And if you look at it, a couple of key highlights. Our e-mobility business recorded quarterly revenue of about 383 crores, volume of around 39, and a year-on-year growth of 116%. Our acquisition of Excel, which is 60% equity stake, I think will only help us in Q1. Regarding the margins, we believe we are continuously improving with the quarterly EBITDA run rate at about 49 crores. And now with the Excel, which the 60% acquisition was done, that is EBITDA accretive. So starting in Q1, you're going to start seeing that as well, right? In addition to the highest ever revenue and the margins coming back, the improvement in the engines business, as well as the retail business, right? So I think we are optimistic with what we are seeing going forward.
All right. Meantime, I just wanted to understand from you, sir, what the outlook is in terms of your revenue trajectory. Given that you have seen a scale up in revenues by about 33% this quarter, your profits as well have come in healthy at about 27 crores. Do you believe that this run rate is sustainable for Greaves Cotton?
Yes, if you see what we have done, right, over the last couple of years, right, as part of our transformation, we have gone from being a B2B to a B2B plus B2C, right, and almost 66% of our revenue is now coming in from B2C areas. We have added a very good, talented leadership team in place, which run the business units. And when you look at the areas that we compete, primarily it's the engines business where auto engines and mobility is back post-COVID. We have also diversified in non-auto there. Electric mobility, the two-wheeler and the three-wheeler, we are a strong player there. And of course, Greaves Retail with its asset-light but higher profitability business, right? So I think when you look at it, I think now we have three strong verticals. And now with the addition of Excel, so the Greaves core business now will not only have engines, but they will have sensors and cables and push-pull levers and lot of other component business in the automotive value chain. And then electric mobility is the vehicles and retail is the after-service, which is multi-brand spares and service. So when you look at it across the value chain, getting closer to the consumer and getting a life cycle experience, right? That's kind of where we are headed. And obviously, it's opened up three distinct growth channels for us.
Right. You know, there's one more point that I want to touch upon, which you said the electric vehicle space. Now, obviously, could you just give us in terms of an understanding that what are your expansion plans over there in the EV space for FY24, as well as in terms of strategy that you will be taking to fight the competition that we've seen increasing in the electric three-vehicle space as well, specifically?
Yeah, fair enough. So if you see electric mobility, right, Q4 to Q4, we did about 383 crores, vis-a-vis at 237. And roughly 39,000 volume, right? And in the two-wheeler space, we are a significant player using our brand name of Ampere. In the three-wheeler, of course, we are in the L3 and the L5 category, right? In the recently concluded Auto Expo in Delhi, we introduced 6 new products, both in two-wheeler and three-wheeler. We have already launched the Primus product and last month, and we will be launching the remaining products according to our original schedule. So the products will come. Product rollouts will happen in the two-wheeler space, especially our next generation NX. Primus is already rolled out. Zeal EX is rolled out. So I think it will be product-led expansion. Then there has been a retail-led expansion, both in the case of Ampere showrooms being added and Greaves retail showrooms being added. In fact, recently Ampere just reached a milestone of 1 lakh retail sales, right, in 2023. So I think when you, and we recently had a tie-up with the Royal Challengers Bangalore as well as their official EV partner for the IPL season. So I think when I look at all of that, building the brand, adding talent, bringing technology, bringing new products, I think that is kind of where we are focused on.
All right, there you have it. Mr. Nagesh, before we let you go, just wanted to also understand the breakup. In terms of your segmental performance, where is it that you see the highest revenue contribution from, and how do you see your individual segments as well, Greaves Electric and Engineering, performing?
Yeah, so if you look at the core businesses that I touched upon earlier, right, basically a core business and then electric mobility and retail, right? So if you look at it, revenues coming in actually have grown in all the three areas. In the core business, it was year-on-year growth when you look at the quarterly 17% and year-on-year growth of 34%. Retail grew at 27% and e-mobility grew at almost 113%. So the good news is, I think finally, after a long period of COVID and post-COVID, I think our three core verticals of components, retail, and electric mobility, all the three are looking up and headed in the right direction, as evidenced by the results.
Okay. Thank you so much, Mr. Nagesh, for joining in with us and giving us an understanding of what we should be expecting from the company going forward. But on that note, Greaves Cotton as of now is trading almost near the day's lowest point, keeping an eye out on that one. Let's move on, Dhwani, and the next stock that you've picked out for us on the charts, that's KRVR. How is this one looking like on the charts? What should we be expecting?
Well, to me, it's a bullish chart structure where we are seeing also a breakout on the weekly charts. In this particular one, we are trading above the previous week's highs. So this goes on my buy list from current level. The target comes over here is of 448 to 450. The stop loss one needs to maintain over here is of 395.
Okay, keep an eye out on those levels for KRBL. Let's move on, talk about Zee. This one is in focus on the back of reports that are suggesting that, maybe the Zee-Sony merger, we could see a bit of a roadblock coming in there. The proposed merger between Zee and Sony could face a roadblock as the exchanges may reconsider their approvals in the light of the recent order that was passed by the SEBI with respect to an SL Group entity, Shirpur Gold. Now, NCLT has asked the exchanges if they would like to reconsider their approval. So maybe we could see a roadblock there, but this is according to reports. We're keeping an eye out on Zee Entertainment.
Okay, let's move right on, Dhwani, and discuss your next stock. At number 33 is MCX. From those 1500 levels, the stock has come off to about 1360 thereabouts. Do you believe it's the right time to buy?
So this particular stock is a stock on my radar list right now. This is one which you need to watch out for. Dips on this particular one where we are not reaching 1300 levels on the bottom side, that gets onto the buy list. At 1300, one can add further positions into this particular one and trail back again a swing trade where you could lick up at a target of again reaching up to the highs of 1500. But 1300 is the entry point for this particular one.
Okay, let's move on. Mamakshi, NBCC, why is this one in focus?
Well, Vinny, a couple of news flows for this counter. Well, there is an order win that has come in for this company. The company has been awarded the work order for various construction and development works in Odisha, and this has come in for a total value of around 264 crores. Apart from that, they also have an operational update that came in. NBCC has secured a total business of almost 1,264 crores in the month of April 2023 itself. Now, definitely in the last 1 month, we did see the stock run up by almost 8.5%. But as of now, the stock is not reacting to that news flow. It's actually, in fact, declining in rate, down nearly 0.7%.
All right, watch out for NBCC at 41 rupees. Meantime, what's making its way to the gainers list is Delta Corp actually today. Dhwani, take us through the charts.
Yes, absolutely. It's on the gainers list. It's on the buy radar. What we are seeing over here, particularly in the stock, is that it's trading above its 50 and 200 period exponential moving average. The weekly chart of this particular one also looks very promising, where we are seeing it making a bottom and giving another swing higher, which is higher than the previous swing lows. So it gets on the buy list on a weekly chart as well. 235 is a conservative target that we have over here. Once we cross those levels, 250 is the next kind of a level for this particular one, where you should be looking up at booking profits. So currently you can buy into this particular one, wait for 250, and a stop loss over here that one needs to maintain on this particular stock is of days low, where we'll be looking up at 210 as the stop loss.
Okay. It's a buy coming in on Delta Corp from Dhwani. Let's move on and talk about Avenue Supermart, or DMart as we know it. This one is set to report its numbers tomorrow in terms of the growth. In terms of revenue, we are expecting a 20% growth there, while the revenues will come in at 10,337 crores. Obviously, we have a fair idea of what to expect because of the Q4 update that they do come in. Company has added 18 stores in Q4, while they're reaching the total stock count of 324. Other than that, we're expecting that the margins will see an expansion this time around a 60 basis point expansion, mainly as we're seeing improved sales coming in from the general merchandise and apparel category, which has been impacted for quite some time because of the COVID situation. Now we're expecting it to start seeing a better recovery coming in there, and a growth momentum there, but still below the pre-COVID levels is what is expected. Keep an eye out on that one, and we'll watch out for the demand trends, commentary on the DMart Ready segment, as well as any inflationary trends, price hikes. What is the company seeing on ground is something that we're watching out for.
All right, let's get a move on then and discuss JK Paper on the charts. Dhwani, pretty range bound over the last 1 month. Why did we pick the stock?
So what brings my attention to this particular stock is the volumes of the day. The volumes over here, what we are seeing, are pretty good. We are seeing almost 5x of volumes compared to the previous session. And the other thing that is noteworthy is that it's taking a support at a 200 period exponential moving average. Today we have tried to cross the 50 period exponential moving average. So on closing basis, this is one stock which will be on my radar. Any closing above 385 is where positions can be added in this particular one. A short-term target over here of 400 can be chased, and a very small stop loss over here comes at 375.
There you have it. That's the take coming in on JK Paper. Moving on then, all eyes on Cipla, slated to come out with its quarterly numbers later today. And here's what the street is working with. The ET Now poll suggests that the consolidated revenues could come in at 5,718 crore rupees. That's up about 8.7% on a year-on-year basis. We're also expecting this time around the operational performance to be a bit lower. This is on a quarterly basis at about 1229 crores versus 1407 crore rupees. Margins are seen at 21.5%, and watch out for the profit number, which isn't really comparable year on year because Q4 last year had an exceptional loss of 57 crores on the back of an impairment assessment of their investment in Avenue. But we're expecting a number of 765 crore rupees. That's down about 4.5% QOQ. Watch out because it's going to be a seasonally weak quarter for Cipla. The US sales are likely to be steady, led by strong traction in their niche products, and the domestic formulation business is expected to report healthy growth across their segments. The stock has managed to recover from the lows of the day and now at the brink of 950 ahead of its numbers.
And let's move on then to Colgate as well. That one is too set to report its numbers, and in terms of numbers that we're expecting revenue growth of just around 3%, and yes, we're expecting a decline in terms of volumes for the company, somewhere around a 2 to 3% decline in terms of the volumes. Profits of the company are expected to see a sharper decline of around 15%, while the margins are expected at 29.7% versus 33% last year. Now, mainly obviously ad spends, they are likely to stay high. That will be impacting overall the profitability of the company because the company wants to reach furthermore to the rural areas in its brush daily segment as well. Overall, a weaker performance from the company is expected during the quarter because of the rural pressure, in the rural areas. So that is something that is what will be keeping the stock in focus. As of now, the stock is not doing anything exciting. It's down almost 0.2% in trade.
Okay, with that then we come to the end of this show. Thanks so much Vaishali for joining in, Vamakshi as well as Lisa. Good to have you guys on board. All right, we'll wrap it up then on that edition of Dhwani. Actually, thank you for joining in on that edition of Market Fatafat. Closing trades lined up next.